on this computer. Let's see. Okay, perfect. So let me start. I made a little bit of a PowerPoint presentation and wanted to walk you through. I think we're going to spend more time on the charts rather than these. This is essentially me, and this is a mandatory disclaimer. Obviously, I'm not giving any advice. This is your money. Use this widely the way you would want to do some research on it. I'm only here to share what I do, and it's purely for the educational and entertainment purpose. So wanted to walk you through essentially what I do, what is my trading. And I know I've been sharing these. Let me know if there's any disruption or you're not able to hear me and so forth. But the whole name of a game essentially is giving you the insight on what I'm doing. I know I'm sharing the screenshots, and I'm trying my best to put the education out there. Sending my logic why I ended up doing it. Sometime with the screenshots, sometime with the videos, and I think a lot of people are following. I'm very happy to see those messages and say, hey, I took the same logic and I ended up taking this particular ticker, and I made some money out of it. So perfect. That's exactly what I want people to take from what I do. So for me, when it comes to market, this is essentially what summarize. These are all the things I take into account pretty much every single day, every single minute I'm in front of a screen. And I'm making some assumptions that everybody is aware of price, patterns, the volume, momentum, volatility, the multiple time frame analysis, and the sentiment. And I'll walk you through pretty much each one of those in subsequent slides. So I think we can skip that. We can skip that. Okay, so coming back to the same thing, when I say price, I'm talking about the candlestick patterns, just usual things like, okay, this is a bullish one, this is bearish, this is doji, and whatnot. And all sort of pattern like piercing pattern, the harami pattern, all of that. When it comes to chart patterns, we're talking about, excuse me, the the triangles, the wedges, the trend line breaks. So these sort of things. Volume is pretty obvious, and I do recommend that book. I haven't paid a single penny by Anna about this, but I think that book is phenomenal. Most people ended up, I think some of them ended up texting me saying like, hey, they use this one and they still ended up losing money. And the problem is we use the volume alone. None of these things are taken into account alone. The stock market is a nice gravy, and you need all the ingredients to essentially, get a nice soup out of it or nice curry out of it. Momentum, the multiple momentum indicator, but all I use is the RSI. And this is an area I wanted to actually spend some more time. Volatility, purely whenever I want to do the scalping, that's only when I look at the volatility. And that's where I use the Bollinger Bands or the ATR, the put call ratios. But this is essentially what I use. I don't use ATR as much. I don't use put to call ratio, but I know there are a lot of traders who even I follow on Twitter. They do mention like how is the flow, and then they put like, okay, these are the number of contracts for call, number of contracts for puts. Time frame analysis, this is key, and I'll walk you through in a few minutes what I actually mean by that. But even if I forget, I want to just give you a gist of it. For me, the bigger the time frame, that's a grandfather. For me, the middle time frame is a father, and the smallest time frame, what I trade is a 5 minutes, is a kid. So for me, whenever I see that the RSI of a grandfather is in a bullish territory, RSI of a father is in a bullish territory, the kid, no matter where it is wandering, will be pulled into a bullish territory. And that is the signal I wait for. And this is what I mean by the multiple time frame analysis. And sentiment, obviously, it's pretty clear. I think we are in the best time when it comes to sentiment. And certainly for the US market, we have a fear index, and obviously, how the pretty much, I think, price action chart patterns are also telling us the same thing. But yeah, the recession fear, the interest rate, all of that, it gives you sentiment. And there are times, pretty much in the morning, I will be just sending a message and say, hey, I'll be trading thin, because the sentiment for me for that particular day is just not valid. And I'm here just to make money. I don't really care whether I make money for that particular day or not. But I want to do it when the situation is right. I don't want to, venture out when there is a storm outside. I need a calm, perfect day to get in. Yes, you can be, caught off guard, but that's where the stop losses comes in. I also take a hit occasionally. I think we can skip. This is maybe somebody wanted to take a screenshot. This is what I use my low float. I do trade it. I very rarely share these, the profits and the losses, but I do trade low float. And, this is essentially I use on the scanner. The watch list. So I think a lot of you have questioned me on like, hey, you know what, how do you know that Roku is the one to go for? I actually don't know. I have 4 or 5 or 6 stickers for that particular day. I've shortlisted, and I keep it on my screen. I keep an alert set up. I have my hourly level set up, and all I'm looking for is essentially. Let me just see the chat. I think somebody could hear loud and clear. Excellent. Okay. So all I'm interested in is whether those levels are triggered or not. Could be on a resistance side and broken, and could be on a support side and reverse. And now, you wait for entry. So all of that, I take care of it manually. And if these things are not done, I do not trade for that particular day. If I'm not prepared, I am not waiting for market to give me the opportunity. Market does give opportunity to everyone, but if you are not ready when and how and at what level you would be entering or exiting, trust me, it's better not to trade. So do your homework, even before the market start. And the best time would be, it's done twice. One when a market closes, and a second one because that's when you have a day close, and then the full price candle, the daily candle is ready. And the second one is the pre-market, because all of your plan can be thrown out of a window on a pre-market, and we'll talk about some of those. The strikes I do select. I know some of you had question, but just for the purpose of and keeping this short, because I want to spend more time on the charts. ATM at the money, that is the strike to go for. It is, if it is expensive one, go even for a smaller number of contracts. And frankly speaking, now is not even the time to be hero. I mean, just play with 1 contract, 2 contract, or depending on whatever your size is, but size down. These I do keep it saved, and just in case, I actually put a notes whenever I set the alerts. I even put these strikes in a note. So let's say Tesla, I need 750 weekly, aiming for 3 to 5 contract, provided the price stays the same. So, so that is because I don't want to be surprised in the morning and say the same contract is now at least 60% up and I enter with the 5 contracts. No, my risk reward did change. I'll probably go with 3 in that case. So that sort of thing. So use the trading. That's what I use. I use TradingView, but yeah, even TrendSpider and plenty of other ones, they do have exact same settings. So to help you out with these. So structuring of a chart, and I'll walk you through these areas. The structuring is important, and for me, structuring is drawing the levels. It helps me get my bias ready. Yes, I am biased when it comes to my trading. People say that don't keep any bias, but you have to be keeping your bias ready, looking at the pre-market action. Pre-market will be telling you, and when you take into account the RSI, you will be able to pick up that, hey, you know what, am I biased on the long side? Yes, it could be rejected. I will get out with the loss. And whenever I am in a loss, I'll just go out with the market order on a green candle. If I'm on a long side, I will exit on a green candle on a market order. If it is a red candle, yes, you will get the the worst fill if you're on the long side. And if you're on a short side, you want to do the opposite of it. The short list of tickers I talked about, and some final add and removal. So let's say Tesla ended up gapping up. If I'm not in a trade, yes, I would wait for a pullback. But if I'm already in a trade, I'll be happy to take a profit. And keeping those micro levels, which is your pretty much these levels I will be walking you through, because these are important. It doesn't matter what Tesla did on a weekly. It doesn't matter what it did on a monthly, but certainly it would matter the most what it did on a previous day, especially the open and close, and then on an hourly basis where it had the most struggle. So if those levels are cleared, that's the entry I go for. The setups I play is pretty much, you can imagine every single thing. So flag, range, flat tops, bottom, wedges, pennants. This, I'm not a big fan of it. Do I trade it occasionally? VWAP, that is the second indicator I use on my trading, not on a scalping, on my trading. So on trading, I use RSI and VWAP. These are the only two things. So keep it clean, keep it simple. And yeah, these are the important ones. So that's would be another level I draw in the morning. So that's my second preparation. And this I already talked about. So let's jump into actually and look at some of these tactics. So everybody is able to see TradingView?
Yes.
Perfect. So pretty much you pick a ticker. All I'm interested in is I want to do some structuring in front of you guys so you can see what I actually mean by these things. So Airbnb. By the way, I haven't traded this in a long time and I have no idea where the price is. Okay, there we go. So, or let's take actually, for that matter, SPY. So I'm on a daily chart and I will be identifying these gaps. So this is all I care about. So I need these gaps. So I got one. That's another one. You don't have to be accurate to the decimal, but you should be okay, pretty much, catching the gist of it. And whenever I'm doing it, I look at what it is doing on the other side, whether it is capturing some other levels or not. So you can just take a look at this one. So I have a green candle base taken. So let's say I have this base taken, I have this taken, I have this one, I have this one, and I have this one. And this gap. So that tells me that yes, it is a pretty valid level. So we'll be making that one. And now coming to let's move this thing a little bit. Okay. So that is a close. So this is what I mean by structuring a chart. I'm going to be taking this one also. And the reason is this. So it's a low and high, and for some reason market decided to protect this level. So for me, it is important. If market tells you this is important, just listen to it. It is important. Now I'm coming on the hourly chart. So now you automatically know that just by structuring a chart, you already figured out that yes, this is going to be a flat top break whenever this happens. The second thing I'm interested in is this one. I've taken this candle, I have taken this candle, I have taken this candle, I have taken this candle, and these three candles. So I'm going to be drawing a level right there. I hope everyone is following me so far. And I'm going to be taking this one. So now I'm going to go for a trend line. So for me, this was an important point. So that was a trend line. So when I know that, yes, prices are on a previous day, they continue to ride this trend line. Either this is a level they're going to break and go up, or they will make another attempt to go to this level and then come down. And when I come to RSI, I'll walk you through that. How do I develop my bias? So I know this is an important one. So I will be shorting if the market is below this level, or if it goes up here and then get rejected. Do I wait for confirmation? Yes. And it would be only on a 5-minute chart. Very rarely the pre-market action will tell me that, hey, you know what, it's time to just go short. And then I will be going for it. So I'm going to be actually moving this candle because the hourly is telling me a slightly different story. So I'm going to actually readjust this level, even though on a daily it was a different one. But I wanted to capture the most hourly candles right there. Pre-market, even if you miss one or two on a previous day, on the same day, it would matter. Previous day, it is okay to even skip one or two. So you're talking about pretty much all these levels are captured. So this is how I'm going to be doing a structuring. And now I go on a 5-minute chart. So whenever it's the same story, that it ended up giving me a nice range. Market is in an indecision based on the RSI. When it comes to RSI, for me, 2 levels are important. Technically 3, but 2 levels. 60 and above is a bull's territory for me to go long. It's not a rule, but that would be a more of a guiding principle. Excuse me, 40 and below is going to be a short. So what I wait for is if price comes here and get rejected, or price comes here and get rejected, and I know that the RSI has not broken this level. In that case, I will be actually going short. So for me, this is what I'm interested in. If this RSI goes up, and I know that, hey, you know what, it's only about a point, I'm going to wait. I don't see much of a risk reward. If it is 2 to 3 point move, yes, I could go for a long and then eventually short it, but that would be a way forward. So these are the areas I am interested in. So first one, the second one. So this is how I will be trading. Let's take another ticker. And my beloved one is Tesla. And I actually ended up removing all the levels. Normally my charts will have something like this. Actually, let's take a look at the chart. My levels will be, and especially the higher you go, I think, this was hammered like anything. I made good money on this particular ticker. I was in, I think 90s or something was my entry, and I ended up selling it at 1100 or so. So yeah, my charts will be looking something like this. So I ended up removing just for the purpose of this education. So going back on the structuring is important. If you have the structuring done, your levels are clean. In that case, it's a battle half won. So let's take a look at this. Yes, that's a level. So I'm taking 1, 2, and 3 into account. And let's see, I think this probably is okay. Actually, yep, that would be, I think I'm just gonna let it be at this level. We'll come to hourly and draw another few levels. So one thing, even though I did end this SPY, the longer levels are on a very wide time frame. So usually daily or weekly. When it comes to my day-to-day trading, I'll draw these levels and I'll remove it. So this is the another one what I end up actually using. So I'm going to be actually using this one. Yep, that's a level. So I know that, yes, on the dotted line, if you can see at the back, yes, I'm taking these all the wicks into account, but all I'm interested in is for this particular day and the next day trade. So I'll be doing these smaller ones. So that's how I'm going to be doing my structuring. So when I have structuring ready, I know I'm going to be probably good for that particular day. So now it's the same principle. You're talking about so for this particular day, and actually, you know what, I think all you want to do is capture the most amount of wicks. That's all. It's not a rocket science. Most amount of wicks. Pre-market, if I'm missing, that's totally okay, but I want to pretty much capture it. So if you look in terms of an hourly, so you know that if Tesla breaches this particular level, that will be a way to go long, but be mindful of this mine here. So 675 is probably going to be your profit target, and I'll come to those profit targets in a bit. Excuse me. So this is how, these are my micro levels. And now coming on the 5-minute chart to actually trade. So you know that you ended up drawing these and you adjust it on a smaller time frame. So you could do something on this. Yes, this will be an important one. And then I already have my daily time frame right there. So when it comes to taking an entry, this is what you want to count on and say, hey, you know what? Yes, price is breached, got rejected, and now they are in indecision zone. 40 to 60 is a neutral zone. So we don't know where the prices will be going. If it starts to go up, it will start to give me a long bias. If it is start to go down, I'm going to be developing a short bias. So we'll see how these numbers behave on a pre-market area. And pretty much the same thing as I did in that one is this. Whenever this starts to go up, I will be going. And 50 and above, I know a lot of people, can you mute yourself, please, guys? Okay.
You'll have to go check your talk. It sounds pretty good. It needs some of you in it, but I think the Jessam's there.
Mute guys.
And Elise, I can't remember what the hike was in Young Women's that you just did, but you'll need to put that one in. Okay. I mentioned it, but I don't know if it was Grand Summit or what that was called. Oh yeah, change it. Will you close my door?
Okay, guys, mute yourself, please. All right, so so this is essentially what I do when it comes to the trading, and now you can see that how the prices are being squeezed. Is this a fake breakdown? I don't know yet, but in a pre-market time, I will certainly know that when prices comes here, what is RSI actually doing? Is RSI bottoming out, or if RSI is actually starting to point upward? So this is when I will be developing my bias. So right now, the market has pretty much given you that we don't know what direction it's going to go. Either it could gap up and invalidate all of this, and then I'll be waiting for a new levels, or it could gap down. In that case, I look for rejections at these levels. So I want the short covering to happen, and then even people do profit taking, and that's when I actually start to do short. The indicators, as I talked to you about, sometimes I use this WMX auto trend lines, and I'll walk you through why. Because there are times because I do pretty much everything manual, so I could be missing some of the important trend lines completely. So this is what the auto trend line does for you. It's not heavily accurate because sometimes it will take even the pre-market into account. But this is something to keep in mind. If you're like, hey, let the computers do half of your work, you should be able to. So as you can see that when prices ended up breaching, you could go, even though it's not big of a move, but there was a resistance right there. So that is the reason prices did not go hugely up. So it tells me that on a bigger time frame, at least there is still a selling pressure intact. So that is something to keep in mind, and that would be pretty much on every time frame you can see. So as you can see, yep, this is giving you try to go up, ended up short down, and you have. So I'm interested in short on this particular. If prices go down, get rejected to this time frame, that's when I will be shorting. Otherwise, I need a structuring of this one too. I'm on hourly time frame. Yes, that's precisely what I need, and I'm going to be doing this. So one. So these are the levels for me to play. This is not a ticker I normally play with, but I just wanted to walk you through like, how things will be done. And let's go on. So just wanted to go back and forth and see if I'm missing something. So manual selection, I walked you through. Levels, I walked you through. Nodes, you'll be doing it. Range break, reversal. Okay, let's identify these ranges. Right, perfect. Okay. For me, the identifying a range would be on a bigger time frame. When it comes to scalping, I will be identifying these sort of setups on a smaller time frame also. But my entries and exits are essentially dictated by this VWAP and if the pattern is breaking. So for me, this is a range. This is a range market is. So let's go on a ticker, actually, what I normally trade. You know why I'm taking it. So I'm taking 1, 2, 3, and it's a zone, so you don't have to be perfect one. Okay, so for me, I'm counting on this is, if I ignore this particular candle from here, it ended up giving me a flag. So this is a pole, this is a flag. If it starts to breach, I will be going. The reason I did not take this particular one is because I know there is a daily resistance right there. So I want to actually take this one and not this one. So most of the trader will be like, okay, that's the top of the flag and I want to enter when the moment it breaches. The reality is, you would not be able to see because there's not much of a risk reward. So look up immediately and see where exactly is another big daily resistance. And when I say daily resistance, for me, this is an open and this is the close. So open and close are pretty much at the same level. So that tells you like is it an indecision? Yeah, it's almost an indecision candle. So I am interested in breach over and above this level rather than here because it gives me only about a point or point and a half, and that's just not good enough. I will be interested in shorting it if it starts to get rejected, and market always gives you the opportunity, always. So let's explore it. So let's say on this particular day, you had a short bias and you wanted to short it right here. And let's say you ended up missing. Now, market gave you second chance and say, hey, you know what, could you short at this particular level? And if you look at the RSI, it gives you a hint too. So in that case, this is not where I will be shorting, but this is exactly where I will be shorting because I need a confirmation candle. And sometime I even come to here. This is pretty much, I would say 80% of my short area. This will be about remaining, let's say 20-25%. So I need a confirmation candle, and that's when you actually start to short it. How long you're going to be shorting it? Till this level, and that's it. So all you count is where is the next support, and this you will be doing it based on a previous day action, because at this particular level, market ended up spending most amount of time, or even for that matter, this one. So like, hey, you know what? I'll take these resistances and I'll take these support, this support, and these two supports. Yeah, you could move it and then say, hey, you know what? Yes, you will be shorting, because remember, we are only here to take a piece. We are not here to pretty much capture the entire move. And once you have defined, and sometimes, people will be like, hey, how do I know I will be taking an entry here? Well, you don't know. In that case, what you could do is you can take an entry at the loss of a VWAP. On this particular candle, you will see that this is a VWAP line. You will see that the prices did breach and it opened and got rejected right there. So you can take an entry right here or at this particular level. And this will be obviously a scalp for 2 to 3 points. You're not going to be looking at the trade. If you want a trade, it would be right here. And these are the best spots for me to take. And the reason is, if I am wrong, this is my exit. So the closest to the support or resistance you take, these are the best trade. And these are the times when I actually go heavy, even on the days when I know sentiment is not in my favor. But I know if I'm taking a short, I'll go heavy because overall sentiment is downwards. So yes, I'm able to stay protected, and I will be taking my first trim right there. So if you can see, it's like 159-ish. And I will be actually exiting at 156. That's about 2.5 point move. And it's an easy money right there. So, then after that, I will continue to ride and then pretty much exit everything right here. Sometime I stay in the trade, and I know that was also a question, and that is where the 9 and 20 EMA comes in. The green is 9, red is 20. So when I know that I have entered here and the prices continue to be still below the 9 EMA, I continue to be in a trade, but I keep taking profit. If you get a 2-point and 3-point move, you better take profit, because you don't know what direction you will be going to. We are in uncertain times, so you can continue to be sure that, hey, you would not be getting this opportunity. So if you see money, take it. There are times I will be using a trailing stop loss. If I know that I ended up paying a price of, let's say, $2.50 for a contract. And when it comes to 30%, let's say I'm at 3.2 or so. So in that case, 0.3 or 0.4 will be my trailing stop loss. So I will be using that anytime from the peak. If the prices are retracing and going or dropping by more than 0.3 or 0.4, get me out, because that means, you probably are out here or even in this candle, but it's a certain money you are taking. And, if you have like 3-4 contract or 2-3 contract, you're talking about a good amount of money, and then it all adds up. So that is how I will be actually doing the exit. Now, let's go to okay, so let's come to the next part, which is the indicators I kind of talked about. These are the only 2 indicators I take. When it comes to identifying a setup, I use none, practically none. Very rarely, I will be looking at where the 20 EMA and a 50 EMA is. And that is always on a daily chart. So if I'm on a daily chart and I am interested in, so let's get rid of this and find 20 and 50. That is SMA. Okay, there we go. So 20 and 50 and a 200. I think let's get rid of 200 and okay. And VWAP, let's remove this one. So it's pretty obvious, the 20 EMA and a 50 EMA. 50 will be farthest from the point and 20 will be closer. If it is a shorter one, it will be even closer to the price. So whenever you see that the 20 EMA acted as a resistance and the next particular day, prices are still protecting that same level, this will be my level for that particular day. That, hey, you know what, this is right at the 20 EMA and I want to see whether this level is protected and I will trade this one on a long side. If prices open below, I wait for a retest of this particular one. And in that case, I will have these three charts with me. This is pretty much what my screen looks like, always. Every single sticker I have open, it will be 5 minutes, 1 hour, and a 1 day. And then apply these indicators. I'll come to the Bollinger Bands in a minute. So this is exactly what I will be doing. You can pretty much do symbols and a time. Yes, should be in sync. Okay, perfect. And in that case, now let's remove these ones. So these are the only EMAs I take into account. I don't look at any other EMA for any other purpose. Let's get rid of the rarely using moving average on a daily chart for a reversal 9 EMA. That would be for the reversal. So let's see. So this is my setup. If I have 5 tickers, my trading view as well as my think or swim in combination on my 2 separate screens will be having this if I'm trading from home. If I'm trading from work, I count exclusively on my notes and the alerts. So coming back on the same chart, when I say reversal and I need a 9 EMA, which is right there. So all I'm counting on is when the 9 EMA is recaptured. So I know 9 EMA on this particular day ended up being pretty much, let's say this came rejection, it ended up riding along and rejection. So this particular next day, if the prices and that opportunity, you will get 26th of May. Let's look at the hourly. So 26th May. Okay, there we go. So this is a 26th of May, 25th, and then 26th. Yes, so 26th of May. And this is where you would be having your entry, which is, let's say, around 9 o'clock. So prices, yes, it did ended up breaching, but now you know that the 9 EMA is breached. It acted as a resistance on this particular day, which is also essentially your close of a previous day, which becomes a pivot point. And if the prices are breaching and protecting this particular level, you would be going long on this one. And I'm taking a look at this on my hourly chart. And I know that, yes, I will be trading till this point because it somehow ended up acting as a resistance. So this will be a resistance. Yes, this is actually a resistance. So from here, you are at the mercy of either the 9 EMA on a 5 minute giving you a support or giving you a ride, or you end up getting rid of your contracts right there. And I'm on an hourly chart. So if you enter at 170, you're riding till 174, almost 175. So that's like a 5-point move. That's a lot of money in terms of percentage, even though it may seem like a smaller candle. So that is something to keep in mind. And when it comes to biases, of course, yes, I am in a bull zone, even on the hourly. And if you look at the daily chart, and I think you can go back and see, you will be realizing that even on daily, this RSI is actually in a bull zone. So it doesn't matter what 5 minute chart is doing at that particular point. You know that the important level is breached, let's go long. And worst case scenario, the loss of this particular height is going to be your stop loss. So these are the things, this is how essentially I play. So it's not, I keep it simple, I keep it clean, and that's how to do it. Let's get rid of this one, identify some more setups. So I'm going to count on something like this. I know that the prices are riding this particular trend line. So they are riding this particular trend line. Whenever this breach happens, that will be a time to go short. And you know that the here they are pointing upward, staying pretty much getting rejected from a bull zone, came down, but took a support at 50. and still and ended up going up. This will be actually a clear indication to go long on the hourly. Doesn't matter what the 5-minute RSI is doing. If 5-minute RSI is giving you divergence on a bullish side, it's a kind of a cherry on a cake. Take it. Worst case, and if you're wrong, the previous day support loss is going to be your stop loss. So that is the way to get out. Now let's look at exact same trend line on a 5-minute chart. So this is a 5-minute chart. And obviously, for some reason, TradingView doesn't do a good job in aligning whenever you change the time frame, but you get the point, you get the idea, and say, hey, you know what? Probably we could do something like this one. So whenever you are, so now you look at the, this becomes a pivot point. And for that particular day, this becomes a pivot point, and it's probably a thinly traded. It's on a 5-minute chart, not much of a liquidity. So you can pretty much skip. If the candles don't have a power, it doesn't need your time. So you can pretty much let it go. If the candles have a power, they are solid green or a solid red, it's worth going for them or after them. If they don't, then pretty much you can skip it. Can pretty much look at any number, any ticker. Same principle. You know that this ride is not going to be forever, right? So create a trend line, and whenever you create a trend line, just look for a clean break whenever that break happens, and come on the, actually I should have done that on a daily chart. Okay, on a daily chart, yes, this is perfectly what I'm looking for. So I don't know when this will happen, but whenever it happens, I should be ready. And you know why I'm doing this. So I made a trend line, and I know that the prices are finding a support, and all you need is a 3 data point, 1 data point, 2nd data point, 3rd data point. After 2, it starts to become valid, but after 3rd, it is certainly a valid trend line. So you know that they are being protected. So this is where you actually can take a long. You will be waiting for a confirmation because you don't want to take a long right here. Because what if this is actually a bull trap? So it could be making another consolidation attempt and then come down. So what you count on, and that I'm counting on, because RSI is pretty neutral. It is not in a decision zone. So when this happens, this is where you actually can take a trade. And this also aligns with your principle of a flat top breakout for that particular day. So this is, it's making a wedge, broke down. Now it's making another attempt, you will be taking. So this particular candle, you will miss. If you're a pro, you might take. There are times I take this one and I take a stop loss right below this candle. So that's how I will be trading it. But even if you miss it, this is a perfectly valid setup. So let this candle form. And after this candle is formed, this is where you actually take it long, because now this particular top or resistance is breached. Even if you miss this one, this particular one candle is a valid candle because it attempted to go down and it protected. So you can take once this price is actually closing back, and this will be all on a 5-minute chart. So when it is protected, you should be able to go. And in that case, a drop or a loss of this particular support in that case, because prices are high, so it is a support. If it is breached, you would be going down. So this is how I trade, not the scalping. Scalping I'll come in a minute. So now, any questions so far? You can unmute and question if you have any question. And it's going to be making actually a perfectly nice range like this. So this is a wedge break also, or ascending triangle, whatever you want to call it. So that would be adding in another confirmation bias on your trading and say, hey, you know what? Yes, it is going. And now you would be wrong on things like these. So this, you know that, yes, it gave me a false breakout, but we are a trader. We trade for 2, 3, 4 points. The option trader 2, 3, 4 point move is a perfect move. So you can go for it and then say, hey, you know what? Yes, this was a fake breakout. And now the prices are going down. That is fine. Let it go down. Now what we need is we need a rejection of this particular level, which never came. So if there is no rejection, you will not be taking a trade. If there is a no confirmation, you would not be taking a trade. You just move on to something next. And then what you do is on that particular day, when you go for your structuring of a chart again, you would be drawing a new level and say, hey, you know what? I am interested in this particular level. I am interested in the stop for this particular day, yes. And that's okay, even if prices didn't go to that particular one and it only respected a daily level. So then I will be moving it to this one because it's respecting the daily level. So I come to this particular one, and so this is how essentially you would be taking a trade. Now coming to, let's move on. The same principle here. So I am counting on, I look at these steep drops. Whenever these steep drops happen, either the prices go and make a flag or the prices starts to go up. If it gives me a V, I'll go and take it. Chances of that happening is less because you're in a bearish territory. So whenever you are in a bearish territory, market needs some time to digest that one. So I will probably move my eyes or keep my eyes away from it, or I will be going on a scalp mode. So this is, so I wanted to walk you through. This line is a 40, this line is a 60, the dotted line is a 50. RSI in this zone is bearish, RSI in this zone is bullish. Anything over and above, let's say 80 is a hyper bullish. So if it is in those areas, you do want to count it. And whenever you see something like this divergence is important. So whenever this happens, then you wait for that level to be breached. I usually go short on these levels, but it's not my perfect forte, even though I know I do take these trades, but this is where I actually fail. I cannot, I don't have a patience. I cannot sit for pretty much, let's say 4 hours or 5 hours in on the hourly candles and, see my premium decay. Even though it was a successful trade, I could have, given me a nice money, a nice reward, but I usually do not. So I count on these support to be breached. Whenever that happens, I am interested in, because I know the RSI is also giving me an indication, as you see that, right? So you know that till this particular level, so you have pretty much at the same level on a price action, and then RSI continue to go down. So 1, 2, 3 point, that's all you need to get your confirmation. And whenever the prices are breaching, that's where you will be taking a short. So even though I am showing it, this is a type of trade I have a most difficulty with, but I know a lot of traders who I know in my own circle, they will be, kind of, looking for this particular one. And for them, it is a range break. This is all they care about. They're like, okay, RSI is giving us a first chance of failure, that it is failing. And I am looking for this range to be breached down. So that's a range you want to pretty much trade. So all they look for is prices breach, attempt, flush. So they will be taking a confirmation, this as a confirmation candle, and they'll be taking their entries right here and stay in a trade till this one, and then do the 9 EMA, do the magic for you. So that's how essentially you'll be trading. So okay, this is the another one. You know that the prices kept going up, they will get exhausted at one point, and before they exhaust, they always give you a second chance. They make another attempt to see if there are buyers available. That is why you see these pretty much double top patterns or so forth. And look at the RSI. So prices continue to make an attempt to go up, but the RSI already gave an indication that yes, it is getting exhausted. So do I take these trades? Yes. On the long side, yes, because this is all I care about. And I look at and say, hey, you know what? They are attempting to go in a bullish zone. Do I have my bullish confirmation? This is how I develop my bias. I look at the hourly chart and develop my bias. Do I need to go long or a short? And this is one of the reason you'll see me probably in a first 20, 30, 40, 50 minutes. I'm actually done for the day. I maintain a full-time job and I have to be out. Fortunately, it does give me some time, so I'm able to trade. So what I'm counting on is the RSI, this particular trend line on the RSI to be breached. It is happening in the after hours. So whenever, so you're not looking at obviously making a fortune out of this particular one, but you will be kind of taking this as a trailing stop loss. And pretty much 9 out of 10 trades I take is with the trailing stop loss, because I was badly burnt in the month of September 20, I would say, I think it was 2020. Yes, 2020. And that was a time I was like, hey, you know what, I'm not, either I will keep my eyes on a screen. So I do take a losses, either my broker gives me a hard time or doesn't take my trade, or, for any reason, let's say, decides to log me out, which happens with me, pretty frequently. Then you have to log back in and all that sort of things. Okay, moving on. The divergences, I think this I kind of, educate and mention a lot about it. Bullish divergence, the bears are about to get exhausted. Same thing on the bearish side, multiple divergences. So the trend line I drew is actually multiple divergences right there. So 1 point, 2 point, 3 point, telling you prices continue to make higher high attempts. And then eventually, they will be coming down. So when this happens, you cannot take a trade right there. You cannot take a trade. You will be waiting for this as a confirmation. And then once this happens, that's when you start to take a short. And usually it will be an end of a day short. Can you catch it? Realistically speaking, probably no, but the scalper should be able to catch this particular trade. So whenever that happens, it's like 120. So yeah, it's a 2-point move on the Amazon. It's worth taking. So something to keep in mind. This is a multiple divergence. Again, 1, 2, and 3 data point. Prices continue to march higher. So 1, 2, 3. Whenever you see multiple divergences happening, it's a gold. That should draw your attention. If it is happening on a daily time frame, bingo, take it. 1, 2, and 3. 3 attempts, prices continue to go down. 1, 2, 3. Then all you are interested in is this. Whenever this breach happens, you will be going for it. So it is on a daily chart, but obviously you will be waiting on the hourly. So hourly will start to give you, where did it go? I think somewhere around here. So yeah, you are on the hourly and you will be looking at this one. So whenever you see that this downtrend is start to be breached, 50, it should draw your eyes. It should be on your radar now. So like, okay, you know what, you ended up missing this one. And now the day has ended. This is your level. This is your daily level. And then you develop a long bias right there, because you know that after spending multiple days, the prices are making an attempt to go higher. Yes, you could be faking out here, but it's a short worth taking. Let's see, not missing anything. Trading options, superior. It doesn't have to be. You could do exactly the same thing with the equities. I mean, if you're getting 3 to 4 point move out of it, in an intraday, why not? Broader decision making, decide to stop trading and go with the heavier size. So these are the times I would go heavy when I know that the prices are actually spending. They made multiple bottom attempts and the RSI is not doing it. Now I actually need a confirmation. So whenever I get that confirmation on daily chart, so you will be missing the first 1 or 2 green candles, and that's absolutely okay. So let's see. So we are on, so I'm looking at this one. This is probably a spot. So this means the green candle. Now you know that a resistance is breached by this particular candle. If it gaps up, then you're counting on whether the levels are protected, the daily levels. On a gap up, either you're looking at, and there's another, I mean, that's a whole different session, gap and go strategy versus gap and fade strategy. I can probably spend about another hour on it. But this will be essentially your long. So when you see these sort of scenarios, I actually go heavy, because here I'm not sure what price is going to do. Here I am kind of getting sure what prices are going to do. If it starts to breach this level, if you have a luxury and it doesn't gap up, then I will be going heavy. If the gap is protected, I will add to my position and stay heavy. So that is how, if I'm trading somewhere close to this zone, I will not be heavy, because I know I'm on a multi-day resistance area. There is no way I'm going after that. Whenever I see these things happening, I will be going heavy. So I know this is a resistance, this is a resistance, third, fourth candle is a resistance. I let this entire day materialize, and then I develop my bias to go short again. And the reason, forget the bullish zone, it is not even in the neutral zone. It couldn't even cross the neutral zone. So that is why I know that the prices are exhausting. I'm developing a short bias, and I look at 3rd June hourly. So 3rd June hourly. Okay, so here we go. So it gives you, so when you go from a daily to lower time frames, you would be actually getting a confirmation. So this is pretty much a flat top, attempted to breach, didn't happen. Right there, I will be actually going short. And there are times like, you see me in the morning that, within first few minutes, I was like, I'm done for the day. And the reason for that is I look for these particular setup, and the moment it starts to breach this one, I will start to take a profit. And anything I can get over and above is a bonus. And most likely the trailing stop loss will get me out. So this is how I look at the sentiment for that particular day. Overall sentiment, if it is a FOMC, you'll see me trading pretty much with 1 or 2 contracts. I wouldn't go, above and beyond that, that sort of thing. Or on a FOMC, I will be going on a scalp mode. So I shared this one 60 and 40, but I wanted to write it as I'll share this with some of you who want it. 40 to 60, we already talked about, that's a neutral zone. This I already talked about, the strong uptrend, strong downtrend, sideways, 40 to 60, same thing, range bound. Okay, we talked about the 3 time frame. So I'll be looking at 5, 1 hour, and daily. This is my default screen. If I'm on a scalp mode, I'll be looking at 5, 15, and 60. And it's the same thing, grandfather, father, kid. If the kid is going in opposite direction, these 2 guys will be bringing the kid back into the game or back into the direction they want it to be, or whatever direction they are in. So that is something to keep in mind. This, I do it on a scalp. This is purely a scalp. This is not a trade. This is scalp. This is my trade. So essentially, if you kind of, do some introspection or kind of a reflection, this is essentially what I'm counting on. It's a game of a support and resistance, trend line breaks, pattern, and divergences. This is my holy grail. It may not work for you, but all I want to say is, spend some time on the charts and you will be able to see that, yes, these patterns are actually holding, and start to take some risk. It may not be with the real money, do it with the fake money, the paper trade. And you see, because the name of a game is you want to get an edge and see what is working for your trading. But these are the 4 things, what I'm counting pretty much exact whenever I am in a trade. So this is what I look for. Scalping. So there are times I say, hey, I lost money, back to scalping mode. And this is what I mean by that. So I am looking at, whenever I'm scalping, I'm looking at 2 things, the Bollinger Band strategy and reversal to mean. This is also Bollinger Band, but here I actually combine the RSI pretty heavy. Now, these strategies are exclusive. Do not combine it. These are exclusive strategies. Either you stick to this one or you stick to the strategy 1. So this, I do it only on 15 minutes chart, and I'll walk you through that one. The settings, what you need on a Bollinger Band is a default setting. You don't need any addition. On this second particular one, you do need a setting change, and I'll walk you through that one. So let's look at this particular strategy. I call it as a continuation strategy. Whatever direction market is, it is expecting a continuation for a few points. And that's all I care about when it comes to scalping. So let's go to this one. So scalping, obviously, you want to do for this particular strategy is a 15 minutes, and you want to do the Bollinger Band. Defaults, the 20 moving average, would not go into detail. This is your 20 SMA. It's a simple moving average, that's the central line. This is standard deviation. So 2 standard deviation above and below. So what I am counting on is, let's look at the strategy again. If the price closes outside the upper band and RSI is more than 70, expect a continuation for long. So whenever I'm on a scalp mode, I change these settings too. So this is what I'm going to go and do it. So I go and change this to 70 and 30. So this is the change I make, 70 and 30. Middle, you can just leave as it is. So for this purpose, I think we can pretty much calculate, or actually let's just do it. So everybody can see. So this will be your 70. This will be your 30. So what I'm counting on is if the RSI is below 30. So now this is a 30 line. If RSI is below this and the prices go, so here I'm interested only in short. if the price is closing outside the band, which is here, I expect a continuation for few points. You see that? You expect a continuation for few points. So if you take an entry here, 88.95, you bring it down to 85. So that's like 2-3 point move you are getting. How long you will be doing it? Trailing stop loss, 9 EMA, do whatever you would want. For me, I wait for the price. When it closes inside the band, I get out. So on the Bollinger Band strategy, that is my exit. Whenever the prices are closing back into the band, I get out. So that is my scalp. So this is something to keep in mind. So that's one. You can pretty much say the same thing. Here, I will skip it because I don't want, I know there was a contraction and prices are already expanding. So I will not take this particular trade because even though it is fulfilling the criteria, you don't see an edge and the reason for that is you're looking for a few points. When it is already out, the market will be making every attempt to bring prices back into the Bollinger Band, and you probably will be losing. So odds of losing here are much higher. You would not do it. So let's say if the Tesla gives you the same thing. So first thing, look at the RSI above 70 or below 30. Long, short, only for this particular strategy. Let's take a look here. Will I take this trade? Yes, prices did close. It ended up even going into, but I would skip this particular trade, even though it gave me a nice compression, but I was expecting a compression in the market hours, not in the pre-market hours. So here you don't have much volatility. This is very narrow volatility band. This is a high volatility band. So I would not take this particular trade because it did not fulfill my criteria. So that is not a scalp for me. Is this a scalp? Absolutely. This is going to be a scalp. You expect prices to continue, but you would also see immediately that this ended up actually being a losing trade because immediately it ended up giving you it will stop you out. And for me, the exit would be this candle. So you're talking about pretty much, and whenever I see this happening, and I see that it's a pretty harsh reversal within, that would be 15 minutes. So in about, let's say 5 minutes or so, you would be realizing that, hey, you know what? Yes, it is a losing trade. You would be getting out. So this is where your stop will be hitting. So stop loss will be hitting. So right there. Okay, am I interested in this? But prices didn't come out. Prices did come out. It did come out here. So you're looking at, and this is where even for this, I would want to have my levels drawn. I would want to have my structuring done on a chart. Without that, I will not be doing it. If my levels are not ready, I will not be doing it. So I know this was an important level. It ended up getting a rejection. It came pretty much down. After a fourth candle, fifth candle, that is not where you will have your edge. So the strategy will be valid, but you're looking at the 4 candles and you would not be, because the real money will be made on a second candle, maybe the third one. So you actually want to see a second candle actually popping out. And this is where you take a trade on a third one. If the first comes out, bingo. So this is something to keep in mind. Okay, Tesla, let's go back and see if ended up giving us anything on the long side. Pre-market, I'm not interested. Right there. So the 15-minute candle, the moment this candle gets closed, I will take an entry right there. There is no need to wait for a confirmation. Yes, you will get stopped out, but you're on a scalp mode. When the moment you start to see in a 5-minute candle, market is going against you, get out. So you're talking about, let's say, you take a trade 734 to 745. So that's about, good 10, 12 point move. So this is your scalp. You need the levels to figure out where I will be taking a profit. So for me, the profit will be right there. This is where I will end up taking a profit. Could it be making a flag and move higher? That's totally fine, but I know RSI is struggling. So if I'm on a scalp mode, yes, I'm happy to take these 10 points. Pretty much pick any ticker. Let's do Shopify. So pre-market, not interested. Yes, I am interested in this particular candle. So I will go, and then I realized that it ended up actually taking me out. And the reason, is prices ended up getting closed inside the band. So when it is inside the band, you're pretty much done. There are traders who will be like, hey, you know what, that's totally fine. I'm going to continue to take a trade. But this is where I don't see much edge, even though the strategy was valid. So I wanted to show you there is no holy grail here. You would be getting stopped out. And when you look at my trading, yes, you see more green than red. And that's because the number of trades I take, I might take, it will be rarely that I have taken only one trade, but those are my high probability A+ setups. But pretty much majority of the time I will be taking 2 or 3 trades, and then one will be at least a losing trade. So you can pretty much look at, and you can do pretty much this on even the indices. Out, this is your trade. So you will be taking that as a trade, and then obviously that's your scalp. Out, but the RSI criteria didn't meet. Out, you will be getting stopped out. And then obviously you need, if I see here is my level, in that case, I will not be taking this particular trade. That's why if it is not structured, and I ended up actually removing a lot of structuring from the chart because I wanted to show you just the bare back, and you can see, how the structuring is done. Will I take it? No. Will I take it pre-market? I'm not interested. So all you're counting on is a contraction. Whenever the contraction is happening, now here I know that yes, it is contracting. So it might move in one or the other direction at the end of the market hours. Okay, starting to contract, that tells me that yes, it is actually going, but the gap up spoils the game. So if I know that, yes, hey, you know what, I'm taking this particular trade, whenever this happen, I am going to be taking this particular trade. Okay, well, the gap up ended up spoiled. So this is when your QQQ gets out of your watch list, that, hey, I'm not going to be taking this one. So this is strategy one. You can pretty much, take any ticker and then apply this principle. You'll be stopped out immediately. Not interested because RSI criteria is not met. RSI, and the farther it is, the better it is. So not, yes, I think this will be a trade, but yeah, you would be making, pretty much, it will be losing trade even if you see the prices came down, but I think this is where you'll end up losing money. So that would be losing trade. So this is something to keep in mind. Would I be interested in this one? Probably not, because it's really close, and then that RSI actually started to curve. So pick any ticker, and then you will be. Now let's take a look on the long side. Yep, will you take it? Yes. So when it comes to scalping, it's not that you would be winning. You would have multiple losing trades also, but the overall name of a game is you start to lose small, and then you go for 1 to 2 points at least on these sort of tickers. It's pretty much valid on every single ticker. And when it comes to investing also, there are times I use the Bollinger Bands, but I use Bollinger Bands on a weekly chart and sometime even on a monthly chart. You can see that's your trade right there. A lot of contraction for the entire day, even a previous day pre-market, some volatility right there. But yeah, so when you see this particular range, it will be broken. So it's the same concept, range break, flat top break, and then, but you're on a scalp mode. So you will be able to just scalp these ones. So that is one. Now let's get to the second one. It's called reversal to the mean. And this is where you will need a change in a setting. So no setting change needed, the reversal to the mean. You need RSI look back setting to 13. The default is 14, and then Bollinger Band setting to 30. So you're counting on a 30 SMA and a 13 period look back on the RSI. And what is the strategy? So whenever prices close outside the band, here they would want to get closer back to the mean. So this is essentially a reversal strategy you're taking it. Here, when it is a continuing, you're actually taking on the same side. Here, if they are going out, you want to take a trade in a reverse direction. And here you do need a setting change. So let's take a look at that one. So setting change on a Bollinger Band is this. Nope, I need this. Input, I need 30. So that's a 30 SMA I'm looking at. And the RSI, on the RSI, you need a 13 period. So whenever I do that, and now I'm interested in, so the prices did go up. I need a confirmation candle. So go up, let it go, wait for a confirmation candle. Whenever that happens, you want to take it short and then bring it back to the mean. So in this particular strategy, I actually have slightly more patience. My stop loss will be the peak because I'm going on a short side. So if prices are going against me, this is actually going to be my, and you always want to wait for a candle close. If it touches, you don't get out. You want to see the candle close, and then you will be seeing this is actually a profitable trade. Yes, it took you pretty much an entire day, but yeah, you would be getting out somewhere in these zones. You can pretty much take anything into account. So did close, it's the same thing. Bring it back. This is where you will be taking a profit. Whenever it comes close to the mean, that's where you actually take a profit. Pre-market, I'm not interested. Pre-market, pre-market. Okay, did close, meet the criteria. I want to take it to the mean. So you want to go and start to take this candle. So you wait for this particular, this is your confirmation candle. Go long right here. Confirmation candle, skip it, go long right here. Yes, this is going to be your stop loss. It's okay even if it is hitting a stop loss. But if you take a 10 trade, you'll realize that, you know, out of those 10 trades, at least you have 5 or 6 trades which are profitable. You will be cutting your losses pretty quickly. So these 5 trades or 4 trades, what you're getting out is actually going to be, you know, giving you. And this is essentially a scalp. So you're pretty much, these are all scalps. I'm not looking at the trades in these Bollinger Bands. I'm only looking for a scalp. And one thing I did share is, so practice these strategies. I think you have it, you know, take a screenshot of this one if you would want. Okay, let's give a couple seconds. Default on the 15 minutes alone, that's a continuation one. The second one is a reversal to the mean. This is where you need a change in the setting. Okay, entries and exits, I already talked about. Whenever you see these pattern changing, flat top breaks, breakdown, breakout, breakdown, support and resistances, I will never take a trade if I don't have these things drawn. If I see a Bollinger Band giving me an entry and I don't have my support and resistance, I am not taking a scalp. Remember that. If my levels are not drawn, I am not even going on a scalp mode. 9 EMA on a 5 minute, keep riding. And there are times I will actually take a maximum profit out if I see a 1 hour 9 EMA price distance. Usually if I'm swinging a position, this is where I'll be doing. I wanted to show you that also. So 9 EMA, 1 hour. So if I am in a swing position for whatever reason, and I know that the prices are actually very far from the 9 EMA, I will actually be taking a trade. And the reason for that is these EMAs act as a magnet. Prices have to come and get a confirmation that, hey, are we allowed to go even farther or not? So they come back to their daddy and get checked, then say, hey, is it okay to go back? So this is something you want to keep in mind. Whenever you see they are farthest, there is no rule or no science how far you will be doing it. But this is where the support and resistances can guide you. For me, rule of thumb is if they are closer to it, I expect them to go farther. And when they are farther, I start to take a profit. And in some time, if it is close to the support or a resistance, I will actually take an opposite trade. So I know that this particular level is important, right? You look at the hourly chart. So whenever this happened, pre-market gave you a breakout, and then you know that you could actually take that as a short. And the reason for that is prices made a high, RSI did not. RSI stayed. So pretty much the same RSI, same RSI. Here, RSI actually made the slightest attempt, but this will be pretty much an invalidated one. And the reason for that is I don't take a short right there. For me, the short will be when this level is breached. And then you know that it ended up giving you a rejection right there. So this was a rejection. So in these scenarios, I will be taking a short. That gives me a short bias. My bias is developed based on what the hourly is doing. because I count on a dad. I don't count on the son. I count on a grandfather to kind of pick a direction, hourly tell me what is the direction I'm going to go for. And then I kind of, let son decide, how the son wants to behave. So this is something, so I know that they are farther from it. They are also near the resistance. Let's go back and see if it is a resistance or an important level, I should say. So yeah, here you can't really pick that one, but yeah, this is the one that it is ended up getting rejected. So if the second candle is not able to breach it, for me, the short will be a breach of this one. So I'll take this as a short, as a scalp. So these are the kind of things to keep in mind. And I think that's all I have for you guys. All right, let's go with some questions people might have. Trading option is superior, we talked about. Let's see if I miss anything. Thank you so much for sharing. Broader decision making, we kind of talked about when you go with the right, trading option, we talked about. Volatility, VIX. Yeah, VIX will help you. So there are a few things I count on. The market reverses if you have a dollar US dollar index. So that is something to keep in mind. Number 2, VIX. Number 3, inflation. Number 4, interest rates. So there are 6 points, but these are the 4 I actually look at and see whether the market is going up. And I wanted to, I think there is a screenshot. I'll actually share a screenshot on my Twitter. I told people in the month of January where I mentioned, and I just don't want to say it, I'll just share it with the proof. I told the people who were in my friend circle and say, hey, I think time to be cautious. Stop loss is set. I expect a minor correction. That was my exact word. I expect a minor correction. I was not even expecting this one. So obviously, I don't want to take a credit because nobody is right on these days, on these things. You can get a hint and then you expect your hunch, whatever you're developing based on the knowledge you have, to work in favor or against. Nobody is able to tell you the magnitude of it. Nobody can say that I predicted, 338 SPY. No one can say that. And if they said it, I can assure you there is no scientific basis behind it. So that is something to keep in mind. So I'll share that. And these are the things actually help you. So can you talk about how to pick a ticker on a daily basis? No, I don't use any scanner, but let's actually talk about that one. So I am interested only in a daily chart when I am picking my tickers. So let's look at the daily, what QQQ is doing it. So all right, so I'll be exactly drawing the levels. So I'm gonna make my levels right there because I'm interested only as a, so this is my level. This is my level. This is my level. I go to the hourly and see how these levels are behaving. I know this is a valid level. I can probably bring this thing down to this. Then I can capture a lot more wicks and the bodies. Yes, that would be the one. And I know this is going to be a support, and I know this is not a level. So let's modify that a little bit more. Yep, that is going to be my level. And then I'm interested in this. The second thing, so now what I'm counting on is I know that it has already made a narrow range. So I look at the RSI, pretty neutral. It's not, and this is what usually you will see on a weekend. On a weekend, the market makers just, they will keep you in the kind of a state of like, hey, you know what, nobody knows everything. So you'll keep guessing what direction you'll be picking. So this is where I count on a pre-market. On a pre-market, if I know that RSI is below 50, it is going in this direction and the prices actually starts to go up, okay, this is when I will start to worry. I will say, okay, I'm not going to take a trade on this particular ticker. I need a confirmation. So this is the level I want it to breach and then get rejected. So breach and get rejected. When it is getting rejected, so goes up, give you a fake breakout, come down, and then I need another retest and I short this one. I'll be shorting this happily, but only in that particular scenario. So let's go to a next ticker. So on a daily chart, same thing, structuring. Without structuring, you will not have any idea what the prices are doing. So you did this one, you did take this particular one, and you go on the hourly. You make few more lines. So it doesn't matter, on that particular day, the line would have been here, and you want to go back. Okay, the line would have been here. But for this particular day, this is exactly the line. And the reason is this. So this tells you that even though there are wicks, but that those were fake. And the reason is this. Those were fake because it ended up respecting these levels as a support, was a resistance, and was a resistance. So now, and there are times I say it is rejecting the same level on hourly 3 times. So, or twice it has rejected. So then I'm actually interested. Now I know that the prices are, the RSI is actually in the above 50. It is still in the neutral zone. What is the level on this one? So it is about 60. So it's almost getting ready. So then I know that whenever the prices are breaching this, I will be actually going long till this point. So that's about 4 or 5 point move. I'll capture it and I'll happily get out there. It doesn't matter how high prices go. I am only interested in a piece of a pie. I don't need it, as a whole. So this is how I will be getting my charts ready. And I know that the CrowdStrike is going to be on my radar. Second thing, I'm going to be doing this one. Am I going to be right always? Absolutely no. So you want to do this. Okay, so now I'm interested in what is happening in this particular zone. And I know at least 1 hourly candle, second, third, or fourth hourly candle. So it could be an entire day watch, or just kind of, the first thing in the morning, it starts to go up. So if it goes up, I'll be happy to take a trade. I know that I'll be going for the price is at 164. So either 165, 168, 160, 170, whatever the closest strike I will be having, I'll take that as a trade. Take that as a strike, and I'll go for it. UPST aims. Okay, UPST. I like this one. Why do I like it? It's actually flagging right there. So I like this particular one. So just by the look of it, you're able to get a feel of it. 60, I expected, because yeah, they just want you to keep guessing that, it could be coming down, could be going up, but you're looking at this particular. So these patterns, I am really interested in whenever these patterns are developing. So the whenever prices, and then let's make another one. So I'm interested in this particular. So that would be on my radar. I will do some structuring of this chart and see if I have a room. If I like, hey, you know what, this is okay. So 35.90. Okay, so I will be interested in only above this particular level, because the moment it goes there, it is in a gap. So there is a gap you see right there. So you see this gap, and you know that the prices, okay, did come. Okay, this is a gap. This is a pre-market, so it doesn't matter, but this is a market action. So this is a gap, and I know this is a level I'm interested in. So I don't care about what prices are doing here, because frankly speaking, you're talking about 13 to 84. It's all just a 70 cents move. I'm not interested in this one. But if it starts to reach this one, yes, that is a good move waiting. So this will be on my radar. And here I'm going to be actually adding as a alert. So you can put an alert. This one, gap entry, let's say 36 strike, but I'm just throwing a number out. Let's say June 24th. And that's it. So I have my alert set up, and then whenever the prices are coming here, I look at that alert and it's like, okay, you know what? Yes, it gives me a time to open my strike. I save it on my either a Robinhood or a Think or Swim, and I will be taking these as a trade. So this is how you will be actually getting your charts ready. Tesla, I'm not sure what Tesla is going to do, but this is a level I'm interested in. Tesla, or go up, get rejected right there. Because at this point, I don't know what direction Tesla is picking. It's in a pretty neutral zone. So this is how I will be getting my charts ready. This entry is a flat top, but I will not be taking it. And the reason for that is it's in a neutral area. There is not much of a support or resistance. So you will be, that's why the line is here and not here. But this is actually a valid flat top. It's on a daily, but yeah, it is invalidated. So this particular setup means nothing. So you'll probably moving it right there. So this is how you will be able to pick up the trades. Inside putting an option trade, which step you got before putting a trade in? Daily, weekly, expiry. Scalp, it's going to be, if it is a index, I'll be using daily. If it is any other ticker, it will be a weekly. If it is Friday or a Thursday, everything is a lotto. And lately, I've not been trading much on a Friday anyways, but everything will be a lotto position. So that is, options are specific this way. Yeah, I don't care about profit. I mostly care about where I'm going to be stopping out, because I know the other direction is a 9 EMA for me or a trailing stop loss. So if I'm right, these two things help me stay in the trade. So yeah, that would be something. Pick a ticker. We talked about taking a trade overnight. Taking a trade overnight. So overnight would be, I am interested not a neutral RSI. If you look at the hourly RSI is neutral. It takes time to move the hourly RSI. If the hourly RSI is pointing upward, so you're on a red candle and RSI is already moving, pointing upward, that tells you that yes, you could be able to look at here. So you're on a red candle, but the RSI actually started to point up. So yes, you would be able to take this particular trade as a trade. Did I take it? No. But on ordinary times, yes, this is what I am interested in, because it meets one other criteria for me, and that is it broke down. It gave me a kind of, it's not a perfect one, but it's a kind of a hammer candle. And this is a confirmation candle. So yes, you could go long on the overnight one, on these one, with your stop loss being this. So if I have a time on a day, time on a week, I will be taking this as an overnight one. I don't take this trade beyond Wednesday. So Thursday, I don't take this particular trade as a overnight, because this chop is going to be the, it is going to kill me. So that is something. And if you take this particular trade, yeah, I mean, you have a pretty good move right there. And another way to find a trade will be gapped up. This is your closing. This is your closing right there. Gap, protected the gap, and came right here. So this is actually, when I see this sort of things happening, I will be taking a trade. And this is pretty much, I open a trade, because I know that it's a kind of a semi-hammer, gave me a confirmation, protected the same level. And now, after closing a gap, it gave me a green candle pre-market. So Tesla pretty much would be, this is a ticker I trade, I would say, I would say probably every day, or at least 4 out of 5 days. So gap protected, this is a trade. You will be taking this as a trade. And another thing I do, let's say I took a trade and then I got stopped out because either it hit a resistance. In that case, I do what I call it as a dynamic trend lines. So my dynamic trend lines will be purely a manual work. So this is what I'm going to go for. I know prices respected this. I know prices respected this. I will be taking a trade at this one, with this being my stop, because I know they have coiled pretty nicely. So I will be taking a trade, but these are my scalp. I will never take a trade, like after 10, 11 a.m. It would be very rare I take a trade, but these are all my scalp. And if you look at the 9 EMA, the same principle I keep, so you look at, so yes, so yeah, the prices continue to stay above 9 EMA, hit your next resistance, you get out. So this is how I will be doing it. So that's my dynamic trend lines pretty much on any particular day. SPY that is the ticker I actually trade the most when it comes to these scalping. So I know that this is a level, it's an important one to go for. 1, 2, 3, 4. So all I need is 3. When the prices came down, this you will never be able to trade. Very rarely people are able to find these and then get into it. But this is not my forte. I am interested in shorting it at these levels. When I know that the RSI is actually not going up, prices are making an attempt, it's going to be a futile one. And then I short by the end of the day. And this is actually by the end of the day, a pretty good move. Here you get the most out of those options. So same thing over and over again, right? So, same dynamic trend lines, you'll keep drawing 1, 2. So this is something to, so you will be able to take these as a trade. Now, why I'm interested in this one? Because it's making in another pattern. I have not drawn this one. That's why you probably are not seeing, but it's making in another pattern. It's an ascending triangle. So it's a break of that triangle. And then you have intraday levels. So you will be drawing those intraday levels as the prices are marching. And whenever that rejection happens, you will be actually taking those sort of trades. And keep an eye on the RSI. RSI is the only one. People call it a lagging indicator. For me, it's actually a leading indicator. It doesn't go all in, but it actually gives you direction, what it is pointing downwards or it is pointing upwards. When it is pointing upward with the momentum, all I'm interested in is whether it is going up. And this is what, I think the trader who I pretty much worship, she takes these trades. So anytime it starts to cross up above 50, she will be getting into a trade. And this is exactly what I take. Because for me, when the price is made a double bottom, gave me indecision, gave me a confirmation, I take a trade. And this is exactly where the RSI of a 50 is coinciding. So yes, you will be taking that as a trade. Your price target, high of a day, that's it. So there are plenty of ways you will be able to do these scalping. All right, any other used to post about a swing setup before earnings with an indecision? No, I don't do that anymore. So not after, I would say, if you look at the action on a daily charts. So if you take a look at these one. So I'm on Apple. When this happened, this is, okay, so that's a 25th February. So after this one, when the prices actually continue to made a lower highs. So here till here, you have no idea what prices are doing. Like, okay, you know what, maybe it is just an aberration, market will start to go up. But here you got a pretty good idea. By this candle, you have a pretty good idea that yes, my prices are not going to go higher. And this was a futile attempt, even though it was a pretty solid March, but in my mind, it was a futile attempt because it could not breach the previous high. And then look at the RSIs on a daily. So RSIs, even though prices made another attempt, they were not able to. So that is an indication that yes, it is an exhaustion. So by pretty much, mid-March, you had a pretty good idea that yes, the market is going down. And this is when I actually made a plan to go on a vacation. So obviously, I don't mean to take any credit for it, but I knew that the market condition will not be favorable and it's best. I'll probably lose money by just watching the charts and so forth. Let me just get out. So it was a very much planned vacation, but I ended up taking it based on the timing of the market. This move, I think I did trade some of that move on the Amazon and so forth. I think even Tesla, I ended up trading that move. But this is where we were planning our vacation. Like, hey, you know what? I mean, if these levels are breached, it's a done game. And sure enough, by the April, that's exactly by May, that's exactly what happened. This is when we ended up actually getting out. So you can see what market is doing. So anytime when you have a clear established downtrend, so makes a lower high, lower high, lower high, you're pretty much certain that, hey, you know what, none of these situations what you were preaching about in the past would matter anymore, because market dynamics has changed and it's better to just move on to the newer strategies. And what I'm sharing now is it's a time tested. This is what most people are trading, and that is why they work. Because as you know, market is it's a collective psychology of every single trader around the world, be it computers or be it the human traders. But it's a collective psychology, and that is why even these EMAs are working. The 20 EMA, why does it work? Because people actually respect that EMA and say, hey, you know what, that's an important level. 9 EMA on a 5-minute chart, it works. Why do you have these sort of pullbacks that happen because of your 1 minute traders. So whenever you see, these red candles in a clear uptrend, that's where the 1 minute traders start to take a profit. They look at this as a resistance and say, hey, you know what? I took my entry right here. I will get out right here. So this is all the action of a 1 minute traders, So 1 minute traders, this is where the 1 minute traders want to short. And then this is their price target. That's how you make the double bottom, so these sort of things. This is where the prices go up because the 1 minute traders look at and say, hey, you know what? RSIs are actually making a higher high. This is possibility. This is a confirmation. This is an entry. This is why you see a higher volume on it, right? So that is, this is how people are trading. So these things work because that's how the human mind works. All right, guys, I think we can talk pretty much all day on these ones. I hope you got something out of it and I was able to add 1 or 2 things in your learning. Thank you all. Thanks for joining, and I apologize for keeping it so late. I know this promise I made about a year back and had a lot of things on my plate, and so thank you. I like that. All right, guys, so let's call it, and I appreciate it. If there's any questions, you can just shoot me a DM or Twitter. I'll be happy to help. Yep. You're welcome, my friends. Thank you, and have a good rest of your day or evening, wherever you are.
Thank you.